and you may find yourself in a new loan partnership.
Alrighty, welcome everyone. Welcome as always. My name is Alex Nichols and I am your host here. Man, I do not get tired of that intro song. With me, I have, as always, our Senior Director, Tim Rowan of Sales Success himself. We have Scott Karch, our Wholesale Manager, and we have special guest, Megan Meyerdick here with us, which I'm very excited from Precision, who is going to teach us all about precision and speed with the HELOC product.
Yeah, by the way, hats off again to the title there, Alex, of the
Thank
webinar,
you.
Precision and Speed. How's that? Listen, we do have a special guest. We also have Mark Orlando on the team on the call as well. Um, just to set the stage and some housekeeping, folks, we always want to make sure we have time before we end the webinar for any Q&A. And I want to encourage you that if during this time in this webinar you think of any questions you want to ask of Megan, well, we will want to put her on the spot. And having said that, Megan, welcome aboard. Thank you so much for being with us today.
Thank you for having me.
So, Megan, I was just sharing with the team and for everyone in attendance, I was just sharing that I want to be Megan when I grow up because she's actually a very high top producing loan originator with Precision Home Loans, right? Megan, is it Precision Home Loans or Precision? Yeah. And but she's actually working this week from her trailer out on the Pacific
Megan,
coast on the beach. So, you know, it's not a bad life that you're leading there, Megan.
No, it's working out pretty good. But thanks to the convenience of figure loans, it makes it easier.
I like that.
Pretty sure I paid my camping bill on my figure fundings this morning. So
that's right. I think you had two just go today.
Yep, one yesterday and two this morning. Pretty much covered my campsite, so we're good.
That's awesome. So, Megan, one of the things we want to dive into a little bit, we do these webinars, our team does every other Wednesday, and it's myself and team just talking about new enhancements, new things, whatnot that we're doing. But we thought it would be fun to have really a true power user come on board. And you actually have a history in both channels with us, meaning you were all originally a wholesale partner of ours. And then I think within the last, well, let's call it this year, but within the last several months, you've all become a retail white label partner with us, and there are some differences there. But before using Figure, and gosh, I feel like we've been working together so long. Has it really been over 2 years already, Megan? Or I mean, that's how long I've been here.
This morning is my 5-year anniversary with PHL, with us standing up Precision Home Loans on the north side of the state. And before that, I spent 15 years on the dark side at the Stagecoach. The idea of a figure HELOC Stagecoach would make turn over a grave and die. Incredibly grateful for this and the opportunity. This easy.
You know what? I think Megan's cutting out on us again. Do you still hear me okay, Megan?
I think all that camping or something. I think we lost her there for a
Tanya?
second.
Oh no, she's
There we
coming
go.
back.
There we go. Sorry about that. I think it was the Wi-Fi. Were you able to hear me at all?
I did. Yeah, we were able to hear you.
Good.
So, Megan, before using Figure, what, if anything at all, did you use for HELOCs, or what did equity conversion look like for you? Typically?
Well, I really didn't use it. We used it very limited for SIMO purchase, but other than that, I really wasn't doing any HELOC at all. And coming from the traditional bank side, we couldn't even touch a HELOC with a 10-foot pole.
Yeah, so it's interesting, and you and I may have talked about this over the last couple of years, but I've contended that as a loan originator, I think that we trained ourselves to hear the term HELOC and automatically say to ourselves, yeah, no, I don't do those. Would that be fair? Like even in your career?
100%.
Yeah.
100%. Yeah.
So what do you have one thing that comes to mind that triggers to you, like when all of a sudden you thought, oh my gosh, I'm going to get engaged with this figure process? In other words, what flipped the switch for you?
I had a couple clients who weren't willing and shouldn't have messed with their first lien. They're in the 2s, 3s, 4s. So I kind of had to retrain my brain to the fact that we did have an option for them and it was worth looking at. And the hurdle of learning something new kind of outside of my box. But once I did one or two, and then obviously had your support, my world was rocked. I'd like to scream figure for the mountaintops. It's so easy and so convenient. And my customers are shocked. I had a customer last night who funded yesterday who texted me and said, I'm so grateful for you. I had no idea this even occurred. This saved me from my tax bill that I'm due in a week. I was losing sleep over something you did for me in 5 days.
Yeah.
Yeah.
See, we are in the business of helping people, as you always say, Tim.
That's right.
Yeah.
That's exactly right. That's the magic. And so,
Yeah.
so now that you've made it such a big part of your business, what does that look like for you? Like in your normal business day, do you just automatically start thinking that way? Like when you're talking to a client, let me run an inquiry first. Like what does that look like for you, Megan?
Absolutely. So I'm marketing it on my social media heavily. Right now for pool season, we're marketing it as pool financing. It is perfect pool financing. We're marketing it all the time as home improvement financing, and obviously during tax season for that purpose. I also partnered with a home improvement company. I go to their home shows, I go to their sales meetings, I talk to their sales guys, and I have them push this 5-day precision home loans HELOC, and I get a ton of business from that. But yes, we start with figure. If there's an opportunity, we run an inquiry. Why not?
Right, right. That's the answer. Why not? Right.
Yeah.
So when you're doing that, and let's use the home improvement example. Maybe you have so many people try and apply, or you run the inquiry on their behalf.
Yep.
What does it look like for you? Because it does happen. Obviously, we know that not every single homeowner is going to qualify and get an offer. But do you then use that as an off ramp into another project or strategy?
100%. I had one that I ran yesterday. He is a 565 FICO, unfortunately, so that's not going to work. But we flipped it. We're going to look at VA cash or FHA cash out, and try and improve his credit so that we can get him back into a figure platform. But it's always the starting point. It's a soft pull. It is no inconvenience to the customer. They don't even have to provide me their social. So we always start with figure, and if we need to pivot, we can.
So when you're using the inquiry tool, are you typically doing it from a live conversation perspective? Like in other words, on the phone with someone doing it real quick, or do you just get their information and then go back and do an inquiry later?
I do it probably both ways, 50-50. Most of my clients are first responders, so there's a lot of text messaging in my world. It's something that's taken a lot of getting used to, especially coming from the rigid compliance bank platform. But most of the time, it's easiest to gather the limited information that figure needs via text, put it together for them, have an idea, and then call them to present it.
So I think you pretty much addressed this, but I'm going to kind of dive into this a little bit as well. If you had to come up with like top 2 to 3 scenarios that you're automatically consistently bringing up figure or starting there, I mean, would you say it's that home improvement or debt consolidation? What are like your top 2 or 3?
Right now, the debt consolidation is the heaviest piece, and we are using figure probably 90% of the time to help customers pay off debt and improve score. So I'm using figure in combination with a rapid rescore product. So I can figure out what their current score is with the figure inquiry. I can have a general idea as to what they owe on their first. And then I can do a rapid rescore strategy with the amount that's available and show them if you took out 100, for example, and you paid off these 6 debts and consolidated these things, I could move your score approximately 100 points, and then we could refinance you on a more streamlined product to fix that first into a lower payment.
Okay, now that is genius, Megan. Like we have not talked about that before, but as a use case, so that is amazing. I love where your head's at right there. That was just like a light bulb moment for me.
Well,
Alex,
and the greatest thing is the figure product is so fast that it performs within that rapid rescore time period, right? Because the rapid will tell you you need to, make the changes to the score in 14 days or the score will worsen. So figure funds give you plenty of time to capture the funds, pay off the debt, and me submit the rapid and have the score improve. And then we can look at other financing options. I'm using it right now for a customer that wants to buy an investment property and their score is too low. So we're paying off all their debt to improve their score so that they can go purchase another home.
Yeah, that's another great use case. And I've talked with I've been at functions. In fact, I'll be speaking at one next month in Reno to a group of realtors. And I said that exact thing. I said, there's a great opportunity to use this process and product if the realtors and their loan officers have clients that are preparing for a future move or preparing to buy, like you said, an investment property. Well, then let's have a strategy conversation around getting your credit where it needs to be and also affect the DTI, right? So that they're
100%.
qualifying for more home or whatever the case might be off into the future.
100%. And I know you'll be shocked by this, as you know me pretty well by now, but I am very hard on my realtor partners about not showing the property until they're 100% pre-approved. And in this case, I'm telling them, don't give away the farm and let them see what they can buy until I have the opportunity to strategize behind the scenes. Leave some excitement, have them be encouraged to improve credit and see the plan, and then go show them all the stuff. That's great, but don't do it there. So that's helped a lot, that my partners are really encouraging customers to have a strategy.
Yeah, no, that's key. And of course, now are you using, now that you have both the direct URL loan originator link in the newest model that you're with versus in wholesale, you had just the inquiry tool, right? But in retail model, you also have the direct URL link. Are you using that link? Are you embedding it into QR codes or doing any marketing materials or anything like that with it?
I've done some marketing materials with it. I've sent it to customers that I think it would be most efficient with based on their timing, but 90% of the time I'm running it through and making sure that everything's handled and strategized by myself.
Would you agree that
people are distracted easily?
Well, and it's funny because I always say, the truth of the matter is homeowners don't know what they don't know. And they oftentimes answer some of those questions wrong, right?
Yes.
And don't get offers, and then you don't know. And,
Yes.
It's like, whereas you could have probably navigated. So would you agree then that the inquiry tool for you definitely has a higher rate of pull through?
Absolutely.
Yeah.
Absolutely. Yeah. And then the second piece of the puzzle that I'm marketing to, that I think a lot of loan officers may be missing out on, is their realtor partners. I've done quite a few loans for my realtors. It's basically a bank statement product for realtors who don't show enough income, which is all of them. And they have the opportunity to pay down mortgages and consolidate debt and go buy other property and pay their tax bills. So I've marketed it really hard in my real estate offices to them directly.
Yeah. No,
Most of them don't even know that a product exists off of a plaid system, and they don't need to show tax returns.
On that topic, Megan, when I've also spoken to realtors on this topic, what's really interesting to me is realtors as a whole, and I shouldn't put them all in the same bucket here, but do they or are they in close contact with their previous clients, and do they know what their previous clients are doing regarding the equity of their homes?
No.
And yeah, I would tend to answer the same way you have, that most don't. And here's the irony. Listen, people are getting lines of credit. They are accessing the equity of their homes for all of the things that Megan just touched on, right? Debt consolidation is definitely with us our number one use case, but home improvement, accessing equity to buy additional property. And isn't it interesting, or isn't there an opportunity, I should say, for a loan originator to be pointing that out to their realtor referral partners and then doing co-branded marketing, whatever the case is, to stay in front of that realtor's past client database?
100%.
To at least be the source for finding out how quick they have resolution.
Yeah. And when they have clients who are looking for a quasi bridge product or who just don't quite have enough, they can make it non-contingent DTI wise, but they just can't get there on the down payment to get the payment where they want it to be. They don't understand that these products exist. So like I said, scream it from the mountaintops, not only at my home improvement guys and my clients and my social media, but also at my realtor partners.
Yeah, it's such a great point. So now I'm going to put you on the spot because you've been a long-time user in the platform. And so you've also seen a lot of improvements in the platform.
So much. I don't call you to complain as much. You hear from me so much less.
Well, I don't know about that. Like Megan calls all the time, but for good reason. So that's awesome. But Megan, talk about that a little bit. So some of the recent enhancements over the last, I'll say even year, what do you think stands out the biggest to you?
The ability to see the loan status and to see the notes. I think we talked about that for many months and you were tired of hearing me say that, but I don't do well when I can't have full visibility, especially when it has my name on it. And the fact that now I can see if a customer called in and what was said, what the status is, what they're working on clearing, what email addresses things were coming from, the visibility to the backside of these loans and what customer service is doing is wildly helpful. I'm so grateful for the notes. So much better.
Yeah, and it's funny, and Alex, you may have some comment here as well, but the note section, we did not even announce that. We literally
Yeah.
rolled it out and just said, well, let's see what kind of feedback we get. You know what I mean? And what's interesting is a lot of our users don't even realize they're there. Because if you don't go to the details page and you don't scroll down to the bottom, as you know, right, Megan, you won't see them.
You won't see it.
Yeah,
But
But it's there and it's amazing. Prayers to the IT guy that clicked that button and put that together. Thank you so much.
yeah, big praise to the team that puts that together. And folks, keep that in mind, right? I see this missed a lot. There's an action menu on the right-hand side. You may have to scroll over a little bit. You go in the details, and to Megan's point, you got full notes on the file now.
Yep.
yeah,
And
and
I've discovered that I have a customer service issue on one or two that I didn't know I had. Customer was frustrated. They couldn't click through correct. It was user error. But they don't express to me that they're having issues. And I can see it in the notes that they're either chatting or calling in. And I can step in and say, hey, it looks like you've resolved the issue. Just checking in to be sure you're still okay. Oh, yeah, I worked it out. Great. But it loops me back into ensuring that I'm giving the level of service that I want to give. It's just been fabulous. I could not ask for better.
Love
well,
hearing that.
she said you heard it, Alex. She could not ask for better, but I'm here to
I'll
report.
come. I'll come up with
We're
something.
doing better,
Just
trust
give
me.
me a minute.
Yeah.
Now, when she's
Really
blowing
though,
up my phone later today, you remember I'm going to hold Megan accountable to that. But I am happy
we
to
always say there's a Megan factor though. If
Megan
we
factor, I
could
love
come up
that.
with a problem that was so outside of this world, no one else had ever heard of it, it will be mine. And Tim will go, "What's weird? We've never had that problem." Yep,
yeah,
that's me. Thank you.
yeah. The good news is, Megan, is and I can't let too much out of the bag yet because we don't have any launch dates on it, but this second quarter, which we just started today, believe it or not,
Mhm.
there is a major focus on even further expansion on the transparency, on the topic of transparency. And there are going to be some massive things happen. You're going to love it. All of the users will. So we continue to push on that. So the notes section will get even more transparent, I should say.
Amazing.
Yeah. So there's going to be some really good things. So you mentioned in passing just a few minutes ago the chat feature. So
Mhm.
when you're talking with one of your borrowers initially and you're doing the inquiry on their behalf, do you give them that instruction? Do you set that expectation with the borrower? Like, should you run into any snags, start here
Use the
first?
chat. Mhm. Yep. Yep. And even my least savvy customers manage the chat. We just had one that she was 86 and we had to set her up with an email address. It was all the things. And she used the chat to verify the email address and to verify title. If my
Yeah, so
86-year-old lady who barely owns an iPhone can do it, anyone can.
yeah. No, that's a great point. And so it's interesting. And I know, Megan, we've worked on a few of these together, of course, over the last couple of years, but you now also, one of the things that we enhanced this last year was if a borrower attempts to, let's say, upload their ID and it fails, that's one of our favorite ones to pick on,
It
right?
was so great.
You now have a condition where you can upload it on behalf of the
Yes.
borrower.
Yes.
But would you agree, because I've contended now, even recently, that even when that's the case, you, the loan originator, can upload the ID, and that then goes to a queue to be reviewed.
Mhm.
But if the borrower chats in and needs help with getting the ID, in my opinion, it's actually almost faster.
I agree.
Would you agree with that? Yeah.
I agree. Yeah, I try and avoid, which is very difficult for me. I try and avoid stepping in because I've learned through your coaching and through experience that the system does run incredibly well if you let it work. But there are times that I've stepped in and actually delayed it a little bit by waiting for the certificate of trust to be reviewed because I uploaded it through the system and there was no condition, so on and so forth. But the system, especially with the chat feature, works very well by itself.
Yeah, by the way,
And for those of us type A control freak loan officers, that is difficult, but it does work very well.
by the way, that you've described actually that most top loan originators are that. I've told that to our team all the time. Like, look, the good ones really are control freaks. And I mean that with a term of endearment. I mean, really, it's you want to be in control. But if you think about the way Figure was built day one from proof of concept, it was built only as a direct-to-consumer platform. So that's why that aspect of it is still sometimes much faster than us as originators getting engaged. You see what I mean? The system was built that way.
Mm-hmm.
And now we continue to try and enhance it and maybe right the ship a little bit there as far as our partners' engagement goes. But you mentioned our favorite topic of certifications of trust. And I pointed something out to you a week or so ago. You know now, and we've talked about it on these webinars in recent sessions, where now the loan originator gets to choose the vesting. And that's new also, by the way, right, Megan? You'll remember where the borrower was the one that selected vesting, sole, joint, trust, Now you, the loan originator, choose it. And when you choose that it's in a trust now, and Alex, you can add some commentary here, please, but when you choose it's in a trust, you'll automatically have a condition day one on your inquiry that you, the loan originator, can upload the COT.
And if this is a repeat customer for me, there's a high likelihood that I have a copy of the COT.
Exactly.
That makes it so easy.
And that's the big thing to me is what has happened historically is the borrower had to select the trust. They would get to the very end, and then we'd stop them asking for the certificate. The borrower has no idea where that is. I've helped my own borrowers like that. And then everything grinds to a halt. So to Tim's
Right.
point,
And then
there's
they're
now a condition
emailing
up
their
front.
attorney and
Exactly. And it's a whole thing. So to your point, Megan, you probably have it, right? So at this point, you run that inquiry, a condition will automatically fire. So before the borrower even starts the app, you get in there, boom, you upload the certificate. It's already done. Borrower doesn't even have to think about it. So you're helping them out.
So Megan, I want to shift a little bit to I'm sorry. I want to shift a little bit to product a little bit and maybe your customer's perception of the product. Again, so often when homeowners hear, and certainly loan originators hear HELOC, what we automatically think is one, most of us think, nah, I don't do those. But the second part of that is we think rainy day fund. We think interest only, no required draw, 10-year interest only, 20-year AM after that, so on and so forth. So do you ever have to, do clients ever say to you like, well, is this really a HELOC? I mean, because we're fixed, we're fully amortizing. Do you get that question? If so, how do you deal with that?
Yes, I do. And I'm careful in my presentation up front, especially in my own marketing material that I create, because it doesn't present the way their Golden One HELOC does that they're used to talking about for the last 5 years. And they're used to a prepayment penalty, and they're used to not having to take a draw, and they're used to an adjustable rate. So I like to cut that off at the pass, A, in my marketing, and B, in my initial conversation. And because I'm Megan, my initial over the top pitch is this is so much better than any HELOC you've ever heard of. Here's all the great things about it that make it different. Wipe out what you thought a HELOC was before. This is a fixed rate, a fixed payment. You select the term, you select the origination fee, has no prepayment penalty. This doesn't touch your first, has nothing to do with some, tied to your mortgage piece. And so I really present that up front before they apply. I will say that probably 50% still say, oh, well, I don't want to take the whole thing up front. So we have to work through some of that. But yes, we definitely have had to educate customers. A lot of that I do in my marketing, so they see it from minute one.
Yeah, no, that's a good call out. I like that. Just setting the expectation. Yeah, that's solid. What do you think loan officers misunderstand about our process and product? I'll say this, you're a branch manager, so you do have a few folks that roll up to you, but you're also a big player within your company, meaning you have a voice, you have a seat at the table, I'll say it that way. So what do you think is the biggest misunderstanding of others that you work with, even with your own company?
It's funny you should say that. On the leadership call last week, we were talking through some of these pieces, and I told my leadership team, I want to bang my head against a wall. These are so easy. I'm screaming it from the mountaintop. I beat a dead horse on every call. I don't understand why our loan officers don't give these a shot. You should be running these on every opportunity. I was coaching another LO, and the customer was looking for cash out. And I'm like, this is figure all day. Go put this on figure. Do these. He goes, oh, no, I've never done one. I'm good. I'll share screens with you right now and let's do it together. And he goes, nah, you can put it on yours if you want. I go, no, no, I'm not taking money out of your pocket. I'm going to help you do this. I think 90% of it is just fear of the unknown, right? And they think that it can't be this easy, and it is this easy. So
Mhm.
for me, just encouraging them to try one, and to walk through them with it was made such a big difference. I think we're just, as loan officers, very stuck in our ways, and we think that maybe it
Mhm.
can't be this easy, knowing especially a vast majority of my team came from Wells Fargo, and nothing is easy there. So I think a lot of it is just our own mindset, because anyone could do these.
It's so true, and it's interesting. I'll just share with you all that my team, and this was some months ago, we were actually on a call with a sales leader with another partner, and we're just doing call and follow up and offering to do sales meetings like we'll be doing with your team in a couple of weeks, right, Megan? We'll jump on one of your existing sales calls. And the sales leader made a blanket statement, said, yeah, I don't do HELOCs. I just don't do them. I have no time for it. I have no interest in it. I just refer them out to my banks and credit unions. And my reply was, okay, I get it. I understand that mindset, because I'll raise my hand, been there, done that in my career as an originator. However, now I ask folks like that to complete the sentence. I don't do HELOCs, but I'll acknowledge my competitors will. And see, the minute I can get that shift of the mindset, they go, well, actually, shit, wait a minute. It's like,
Yeah. Yeah. And if time is the most valuable piece to an originator, this is your most valuable product, because I can tell you, I spend far more time on all of my other loan products and on VA and on FHA and on trying to make things work with my bank statement products and doing DSCR than I do on these. I mean, my total time up front on these is less than 10 minutes. I've had a few lately where I had to do more customer handholding, but all in all, we're talking about less than an hour from start to funding and happy customers. If you want to have volume and compensation with the least amount of effort, this is it.
I had a branch leader. I was on site with them. This was in Texas a year or so ago. And as the branch manager walked into the office, so we were meeting with his group, he said, listen, I just got a check for $600 and I may have spent 5 minutes on that. That's not a bad return on investment,
No, it
for,
is not.
for
Yeah.
my time.
Time is
So
money too, that's a big thing to me. And that's what I really try to tell people up front is don't spend a lot of time on these. Like this is what we're here for. We got a full customer service team. And to your point,
Yeah.
Megan, like that's the whole design. I had someone laugh at me at a convention once because I said, hey, like we have this fully automated HELOC, and they laughed at like we don't do HELOCs. I'm like, no, you have to wrap your head around it. I love the way
Yeah.
you phrase it, Megan. This is as easy as possible.
Yeah. And that's the way I'm going to continue to market it. I'm talking to my leadership team. I'm going to start doing some more home shows. I'm interested in doing the state fair and things of that nature, because these just clearly aren't talked about enough. There is a huge client base for these, both in LTV, in FICO, and ease of use. These are amazing, right? Our self-employed customers, this may be their only option. I have broker
Mhm.
options with HELOCs for bank statement products. They are not this easy, and they do not have this kind of pricing.
Megan, you mentioned the connecting to the bank account. So I want to drive the point home of the right verbiage, right? Not bank statements, but linking to bank accounts. Okay, good. We're all
Yep.
good there. But Megan, you and I worked with one, and I think it's a worthwhile story to share that we learned, and that we should
Oh yeah.
want to share this knowledge. So you had a self-employed borrower that does very, very well for themselves, um, and they linked to their personal and business accounts. But let's talk through what happened, because one of the accounts the borrower linked to our system found NSFs, right? Which automatically kicked or depleted the amount of income that we would use. And what we discovered, Megan, working through it wasn't actually her account. She had a joint account with one of her family members, if I remember right. Is that correct?
Her sister, correct? Yep.
Yeah. And what was happening is it was because her name was on her sister's account and they were all under the same banking institution, it pulled that account as well, right? And that is so what did you do on that, Megan? Did she remove herself from her sister's account? I can't remember what we did there.
We re-upped under a new email address. And when she did the Plaid login, prior to doing the Plaid login, she went into Bank of America into the settings for that account and turned Plaid access off. So when she went to relink, that account wasn't visible through Plaid anymore.
That's smart.
Yeah.
That's really smart.
Well, that was Tim. So cheers to Tim.
Tim is smart. This is why he's senior director.
That was Tim.
Must be. Well, it's interesting because, and Megan, you've said it time and time again on this call of how easy it is. That's not to say that there aren't going to be times where you have to navigate and maybe get outside the box a little bit to try and figure out what's going on. You know what I mean?
There's been items, but there hasn't been a single one that we've been able to work through.
Yeah. I just thought that was an interesting one because it was really on the tail end of us having added the ability to connect and use business bank accounts, and we couldn't figure it out. Remember, the borrower was frustrated. And
we ended up screen sharing with her.
Yes.
She was at a horse show. Tim was at his desk. There was a whole thing.
Fun.
We could see the
really
horses
fun.
in the background. But to give context, she has 6 figures coming into the checking account every month. And this system was giving her $11,000 a month in income. And we're like, there's this huge variance. What is it? And so we learned that you can't have more than 2 NSFs in a 60-day period. That's right. Or the system kicks it out, which makes sense.
And in this particular case, as it turned out, one of the accounts she was linking to was a joint account that her name was on. It was her sister's account and her name was on it. And lo and behold, it was the sister's account that was causing the issue. So heads up to everybody, if you run into that, think a little bit outside the box. Like some questions to ask is, when they're linking their business accounts, do they have that feature turned on at the institution level?
That's a big one, especially with smaller
Megan, sometimes
banks.
you have to, yes, they have to actually turn that feature on.
Yep.
So
most of the banks in the Midwest and things of that nature, we found out from my 86-year-old client, their ability to use Plaid is not as strong as it would be with some of the national lenders. My poor old lady had to go into the bank branch twice to have her banker help her turn it on, and so it comes with its own set of stuff. But the great thing about Figure is, if Plaid doesn't work, there are other options, and we use the other options.
I like that. I like that very much. I'm going to quote that. I also want to take a moment here. There is a great question in chat that coincides with this. It is from Jim, and I'll summarize it. Jim is saying that he had a problem with a deal because Plaid was not working with Citizen Business Bank. Okay. So to summarize what Megan's saying here, there is a setting in a lot of banks that needs to be enabled for third-party access for Plaid, right? We only go through Plaid for bank accounts. So this is something where you should, if it's having a hard time connecting, talk to the borrower about, and they can check on their online account, or as Megan said, maybe they have to go into the branch to talk about it. But there are other options, again, to Megan's point. They can link taxes, payroll, they can upload pay stubs if they're W-2. If you'd like to learn more, there is information in the Resource Center, or you can email us at salessuccess@figure.com. But keep this in mind, right? A lot of people I see miss this. There is a setting on a lot of bank accounts these days that you have to enable, and the borrower doesn't know about it.
Yeah, and by the way, I'll add to that. And you said it was Jim that asked the question. Yeah,
correct.
So Jim, here's something, and anybody that wants to try this. One of the things that we've learned, in fact, Megan, it might have been you and I that worked on that with that one client, is I literally went and Googled it. And I said, how to ensure, and I'll use Jim's example, how to ensure my Citizens bank account links with Plaid. And wouldn't you know it, Google gave me a step-by-step bullet point response on how to handle it specific to that bank. So sometimes it can be as simple as that, By the way, a telltale on that is if the borrower's connecting to the bank account, where it can be a little misleading is on that plaid screen, the borrower authorizes, yes, share data, yes, do this, yes, show my deposits. So in the mind of the borrower, they think I have already authorized this, but there is an opportunity or potential that it needs to be done at the institution level in their actual account settings. And so if you run into that and a borrower connects the bank accounts and you see the default $12 annual income number, that's a default number, by the way, $1 a month. They've said they've connected to the account, but the account may not be sharing the data. So your next step, your next strategy would be to advise the borrower, check with your institution and make sure that feature's turned on. I think we should go to some Q&A here, by the way. Mike, do you want to lead us out there?
Yeah, of course. So we answered Jim's question. The next comes from Daniel Fowler. What can we do about getting a second lien waived when we have a formal payoff received from the lender and confirmed by the county?
So I'll try and take this, and Daniel, keep us honest here. But I think what you're saying is our system is finding an existing first and second lien, and you're indicating that the second lien that our system is finding has already been paid in full. Is that accurate, Daniel? Just I don't know if you can give a thumbs up or whatever. There is an aspect there that I would want to know if that was the case, did you happen to see a lien attestation screen pop up, giving you the opportunity to challenge the existing liens we found on the property? That's the first thing to look for. And then the next thing is you could reach out to us and we can take a look at it for you and see, is that something we can push up and, get the vendor involved to see. So Daniel, I just have to know a little bit more about the transaction. If the way I spelled it out, if that's what you mean.
And I will add on to that, depending on what partner you're under, we have different support emails that goes to that operations team, and you can send them the payoff letter and the rest of the information, and they can contact the vendor. It's not a quick thing. They do have to communicate with the vendor, and they basically have to get them to adjust it on their end. But it is something we have done in the past. So send an email, salessuccessfigure.com, and we can always get you pointed in the right direction.
We had one of those not that long ago, Tim. It was a one-off, a smaller company that had been paid off. And to Alex's point, we sent in the copy of the recorded payoff. It took 5 or 7 days, and they were able to remove it.
That's forever in my world.
In normal lending world, that's looking really good. So I'm still impressed.
What's up next, Michael?
All right. I had one where they could not import business statements, but sent them to me directly. All right. So now how this one's going here. So how come we cannot use those on a bank statement loan? Details they have 141,000 deposits last 12 months, have a hard credit pool, so on and so forth. But this is the first application they put in, allowing me to pay off the city card. We declined it because we didn't use his business bank statements for some reason.
Got it. So it's a great question, Brian. So thank you for bringing it up. Number one, I want to clarify, and I kept Megan honest a few minutes ago on this topic. I want to be really clear. We do not have the ability to review bank statements, but rather connect to the bank accounts through the Plaid system. So one, I would encourage you to set that expectation of the borrower and be prepared to have the conversation that he might have to have his institution turn that on if it's even available, right? Now, the reviewing the business bank statements, we don't have underwriters, folks. We have customer service teams, we have ops folks, we have product engineering folks, but we do not have underwriters. As great as our teams are, you don't want them reviewing bank statements or tax returns, I promise you. You know what I mean? It's not what they do. So think digital, try not to fit a traditional loan process into this one. Megan, is that a fair statement, by the way, that I just said
100%.
Because we all get used to what we know it takes to do normal loans.
Yes.
But this is a far stretch from that.
This is not a bank statement product that you're going to send into the investor, and they're going to send you back an Excel spreadsheet detailing the deposits and the total amount. It's not the same, and you don't want it to be the same.
That's a great point. And I just want to jump in here because I deal with this on a daily basis. Figure does not do bank statement loans. We are a full doc lender. It just so happens that one of the options we allow the use of Plaid, which is an option to verify your full income. If that doesn't work, you have another option using tax returns. And I often get the response, but they don't show everything on their tax returns. Well, then it's not really a full doc. You'll either what or you use the tax returns.
Yeah, no, it's a great point. So, Brian, I do think you have some opportunity there. Again, it just depends on who the borrower banks with, and can you walk them through connecting to their business bank accounts and personal as well. And Daniel asked an additional question. Mike, I'm actually going to jump into this real quick. Can we request a condition bucket for the borrower? So if the borrower sends us something, we can direct upload. It's not a bad idea, Daniel, but I'll give you some feedback on this. We get this a lot, by the way. Our partners, and Megan, you can chime in here too. They say, well, I already know what I'm going to need on the file. Can't I just upload it all now? The system wasn't built that way, team. And the reason it wasn't is because it goes step by step by step. And if a borrower completes something, I'll use the ID. If the borrower uploads the ID and it passes, there is no reason to upload it. You see what I mean? It literally goes so fast in theory that unless it becomes a condition, there's nothing to upload. So right now, today, even though you have a documents tab, you could upload as much as you want in there. However, the reality is unless it was a condition, it's never going to be reviewed. So it's good feedback, Daniel. The way the system's built, it will only give you the ability to upload a condition if in fact it's something that's needed. By the way, I'll just share with you this, my opinion. I think it's actually a powerful piece in the sense that I have seen loan originators literally in our system run an inquiry and they see a box there where it says upload documents. Now, a part of me wishes that we'd get rid of that, but there's a rhyme and reason for it. And here's what I've seen loan officers do. They upload tax returns, W-2s, pay stubs, bank statements, a copy of the title report, a copy of the appraisal. They upload everything they would like they're submitting a real loan. Folks, we don't need any of that. So it's just the way the system was built. So, all right, back to you, Mike.
All right. In the figure portal, there is no link to send to a borrower. Are you referring to once we, the LO, have created an inquiry? Very frustrating. Been asking figure for this for a while.
Let me go ahead and answer this one here, Tim. So just for you folks to be aware, right, this webinar is for everyone. So if you're under Figure Wholesale, you have to go through what is called the inquiry, right? And you're going to have to go through 3 steps. The third one fulfills RESPA and a few other things, including a broker-borrower agreement. So you do not have a direct link. I've seen partners do some things like collect some information ahead of time, but you do have to do the inquiry. Bunch of legal reasons for that. If you're under other partnership types, you may have a direct referral link. That is because the partner is themselves originating, again, bunch of legal stuff. So if you're curious about the ways you can start the file, strategies around it, things of that nature, again, contact us, salessuccess@figure.com. We're always happy to answer any questions, especially when it comes to partner specifics.
Yeah, and it does come down to the partner type. And I do want to lean on this, and Megan, I'm going to pick on you again here for a minute. The reality is, and Megan, you've worked in both channels, and you continue to use the inquiry tool. As much as that link is cool and maybe a great way to attract brand new clients, is it a fair statement to say that's still your path of choice?
100%.
Yeah. So just keep going on that. Ranil, I think was the name. Okay, Mike, what's up?
Awesome. All right. So in the figure is kind of the same question. In the figure portal, there's no link to send to the borrower. Referring to once this is the same person.
Yeah.
Once we okay, I'm sorry. Oh, actually, you know what? I just read the same question again. Here we go. I'm with eMortgage. All I think I have access to is Figure Wholesale. I don't see a direct link anywhere when I'm on my dashboard.
Again, I'd have to dive into that partner and see what the difference is. If eMortgage is a wholesale partner, and I'm sorry, you'd think I'd know that off the top of my head. However, there's hundreds of them, so I don't know every single one.
I believe eMortgage is under Figure Wholesale, and so they would not have a direct link. They would have to go through the inquiry because it is brokered. So keep that in mind. But again, to Megan's point, inquiry tool is the best way because you're seeing everything up front.
Yep.
All right.
Yeah, and Ranil asked that same question. So, by the way, on some of these, email us at salessuccess@figure.com, team, and we can dive into to what your current partnership level is and that type of stuff.
All right. I struggle getting my self-employed borrowers approved with Figure. There's better luck with Nifty Door for the self-employed.
And that's fair. So let's talk through this. One, Tiffany, have you tried it recently? Because Alex, keep me honest here. It's literally only been within the last couple of months that we've actually allowed business bank accounts to be linked. Historically, we
Correct.
have not, by the way.
Mhm.
I will share with you that we have seen a huge lift on that topic right there with self-employed. The reason that you're running into that with the Nifty Door is because they actually have a physical underwriting element. So it's kind of like this quasi blend. You'll typically find a difference in rates where we'll be stronger there. But again, Tiffany, I would just ask, what was that since we've allowed business bank accounts, and making sure you have a good understanding of what that path looks like.
See. Tiffany says, wait a minute, say that again. I'm trying to understand what you did. You canceled. Oh, here you go. You canceled Plaid and used another way to source income.
We did not cancel Plaid. We just now allow Plaid to connect to both personal and business accounts. Historically, it was only personal.
Right. So back from Daniel, he said the second lien showed up originally, but it was small and they weren't able to pay it off with the Figure HELOC. So they paid it off outside of the Figure loan and would just love a way to be able to remove it.
Yeah, so again, Daniel, we should probably connect, because I'm trying to figure out how I mean, if our system's seeing the lien, it's because we're pinging data sources. As an example, if they just paid one off, even though it was a small balance, depending on how fast the county actually reports that, meaning recorded at the county level and actually reports it. Because remember, we're not opening escrow somewhere. We're literally pinging data sources. And so that would be the key. Does it show up? Like if you were to pull, Daniel, outside of our system, if you were to pull a property profile, would you see a release of lien for that second that they paid off? And depending on how long ago they paid off, you may or may not.
My recommendation is always 45 days after it's been recorded with the county, just to make sure everything's clear. But again, just email us and we can get you pointed to the right direction where you can send those docs for the payoff, and then they can contact the vendor to get it squared away.
All right.
And
Emic
then-
says Figure loans are the best. So glad we have access to them. Let's see.
He's correct.
Love it.
Brian says it was Wells Fargo and is able to do his personal statements that showed his Social Security income. That's good.
Yep.
All right.
That works fine.
Okay. What is the formula for calculating income based on the bank account via Plaid?
Oh boy, Reginald, you've asked a very in-depth question, and it's a very large mathematical equation that I won't try and explain on this call. But we are going to look at payroll style deposits if they are a wage earner, meaning employed. The system is then going to gross up those deposits, because we realize that as a wage earner, they're net, not gross. So it is going to gross them up a certain calculation. So I mean, gosh, the algorithm there, I don't know any other way to say it, but the deposits are grossed up. I just don't know the number.
Yeah, and that's the biggest thing to me is have the borrower link, number one. But the big other thing, I think there's a misconception I see a lot with borrowers is they don't always have to verify the full stated income, right? Just enough for DTI thresholds. So a lot of times you'd be surprised they connect their account, they're done. Like, a lot of times there's a lot more stress that needs to be involved when there doesn't need to be. So just have them link. It'll let them know the exact dollar amount. You'll see that in the details.
I'm sure you guys have covered it on calls past, but also a reminder that the system can't verify a number above and beyond what you've entered in the inquiry. So always err on the high side. If you believe your borrower makes 200, mark 225 or 235. If you mark 180 and they verified 200 and they needed the 200, the system won't see above and beyond that. I do like to preference the conversation with my customers, because sometimes they'll log in and go, wait a minute, I told you I make 200. Right? It's okay. You can verify up to the 200. I just wanted to be sure I didn't short you if it captures any additional income.
It's a great point, Megan.
Everyone listen to Megan here. She's very good at this, and I
I
could
try.
not scream that enough if I could.
Yeah. Yeah. And if you preface it, it's not an issue. I laugh because on the one we did with Tim, she makes just under $1 million a year in deposits. So we put 875 or something in that nature. And she logged in and looked at the number and goes, "There's no way." I go, "Well, let's put it in." Sure enough, she verified $700,000 in
Yeah,
income.
that's
Um,
right.
so sometimes you just have to be a little bit of ahead of it for your customers. But pro tip, don't short yourself because you will have to start over.
Mhm.
All right. Had a body shop business owner not get approved because I guess Plaid didn't count all of his insurance company type checks into his account. Can that be overwritten or fixed?
Okay, so Michael, here's the question. One, I would ask what type of accounts. So personal accounts, this is where it gets interesting. Personal accounts, the system is going to look for payroll style deposits. And how I want you to think about this is source and cadence and consistency amount. You know what I mean? The example I would give is I helped a loan officer a while back. The borrower is a cosmetologist. Um, she received funds from Zelle, Venmo, PayPal, personal checks, cash in a personal bank account. The system will not pull that as just a general rule. However, on a business bank account, it will look at all those deposits. And then, depending on the type of business, and the borrower answers these questions, percentage of business they own, as well as type of business, the system will then apply an expense ratio factor. And before you ask the next question, what are those factors? Kind of a side note here, they won't tell us. Meaning, I do not have any sheet for expense ratio factors. And that's just a conservative approach. So that, as an example, I use this. If I found out that a landscaper had the lowest expense ratio factor, as a loan originator, it might be possible that all of my self-employed borrowers were landscapers. You know what I mean? So
No
that,
different than trying to get appraisal waivers. If we knew all of the matrices for appraisal waivers, suddenly every loan I have would get a waiver.
right.
Mhm.
Great point.
All right. Last week, I had a client approved until the trust was uploaded. He is listed as a successor trustee and beneficiary of the home. The trust was in the name of his lifetime partner, but she passed away and was the only trustee while alive and not incapacitated. He is the beneficiary of the home and trustee. The trust states he has the ability to take loans if she was incapacitated or deceased. Was told it was denied because he's a successor trustee, not a co-trustee, and figure doesn't allow this.
Yeah, that's a fair statement. And so, Derek, I'll just apologize for having gone through that, but it is very true, and we're very conservative here. And just as a little side note, we follow trust rule to the county to the T, like you know what I mean, the trust requirements and so on and so forth. And where this can be a little frustrating is right now in our system, what you'd have to do, and by the way, what that borrower should do anyway, is because they're the successor trustee, they should transfer either into their name or their own trust, whatever the case is. That's absolutely what they should be doing. In our system, however, and this will frustrate you, so I'll just hit it right out of the gate here. When your borrower makes that change, that is going to be a 90-day waiting period for us. Any change of ownership on title automatically flags a 90-day waiting period for us before we could go back in. By the way, the why there is because we believe it will take every bit of that long for the county and ownership records to be properly updated and a matter of record. Remember, we don't have an escrow officer to call or anything of that nature. This is all pinging data from different sources, right? So I understand the frustration, Derek, but yes, that is accurate what took place on your file.
And to be fair, that's half the amount of time that would be required on a conventional cash out transaction with a title change.
Oh,
We would
that's an
have to wait.
interesting point.
We would have to wait 6 months on conventional anyway.
Mhm.
All right. Back to Tiffany. She said it was before business bank statements were allowed. She's got that. Let's see. In the other income section, can you clarify what goes here? Is it annual or monthly?
Alex, I'm going to let you take that one, my friend.
Thank you. So I get a lot of questions on this. Number one, it's annual. Keep that in mind. Monthly, it's not going to take it. This is going to be for anything outside of their annual amount. This usually goes into things like asset depletion if we have to do it. But this will come into smaller things, right? When it comes to like savings, retirement. But what I usually tell people, if it's included in their annual amount, I would just still put it in the annual income box. So, for example, where it says other income, one of the examples it gives is rental income, right?
Mhm.
But if that's a part of their total and like a main form of their income, you can put it in their total annual income field. Now, here's where it gets a bit fun. A lot of this still is added together. So you can't really mess it up, in my own words, when it comes to it. But for the most part, I would say total annual income is going to be what they make annually, spousal income and community property or homestead states, other income, anything outside that annual amount. So, like, I work as a trainer here, that's my annual amount, right? I have a certain salary. If there was any other income on like a side business or job or anything like that, that's what I would put in there.
By the way, Mike, I want to jump through these a little bit real quick. Derek's made some great comments, thanking Megan for the income. Great tip on entering income, Megan. So look, you're already helping people. Michael says it was a business bank account. And Brian, going back to his original question, and I do want to spend a minute here. The second part of the question was, it was Social Security income on the bank account income, but it never pulled his business. Both of them were with Wells Fargo. So he physically sent you the Wells Fargo statements. And of course, we've covered that. We don't have the ability to physically review bank statements. However, Brian, please, please, please follow the logic, work with the borrower and find out, especially on their business bank accounts, if they have that turned on in their preferences at the institution level. It is a major, it's a game changer, right, Megan? Like we learned that. It was like, well, wait a minute. And again, Brian, you can Google it. Literally use Wells Fargo as the name, how to ensure my business bank accounts connect with Plaid, and you'll get a bullet point response of exactly what the borrower can do with the institution to make sure that's turned on.
Now, the last question here is from Tiffany. So basically saying, I had a borrower not get an offer due to credit utilization in December. He has since paid down debt. How soon can I rerun a scenario? I would say now is a good time. I usually say about 90 days, but this is something that's since December. If you're paying down debt, go in, run an inquiry, right? And it will let you know. I personally can't guarantee if there's offers, but there has been now enough time, especially now that we're in April with debt paid down. Go ahead and take a look to see if offers are available.
And on that one, Tiffany, and actually, Megan, I'll ask you the question. So you run an inquiry for a borrower and it doesn't get offers between credit utilization. What's one of your next questions of said borrower?
Mhm.
Well, I may at that point be, depending on what the scenario is and what they're looking for, be running a hard report on my side to look and see what we need to do on a rapid rescore. That's funny though, because that's really rare for me. I don't typically have that issue, especially when the system prompts and allows debt to be paid down within the transaction.
So one, that's a great response. And I would just add, Tiffany, who asked the question, my next question, if you know this already, is the borrower married? Are you in a spousal and community property state where you can use spousal income? And if so, try running the inquiry under the spouse's name, understanding you're still using both incomes in combination. You may find one spouse has a whole lot more debt and liabilities than the other. So.
Alrighty, folks, we are now here at time. We're going to go ahead and wrap things up. Before we do so, Megan, is there any last things you want to say? Anything you want to plug? Anything like that?
No, I just would heavily encourage loan officers on the call to give it a try. Worst case, try it once. In my household with an 8-year-old, we call it a no thank you bite. Try it once. If you don't like it, then no thank you. Don't do it again. But I would highly encourage you to just take a shot at it and see if you can make it work. There are going to be a lot of customers who you want to retain in your book of business during this high rate season. And if retaining them by helping them with a figure HELOC keeps them tied to you and keeps their loyalty to you, highly recommend it, because there are going to be competitors who are going to be willing to help them. And you don't want them working with another loan officer you want them to come to you for everything. So highly recommend trying a no thank you buy on your figure HELOC if you haven't done it already.
I love that. And Megan, thank you so much for being on this call. I know we talked about doing this a while back and just never made it happen. And I'll happily join your call in a couple of weeks. And Megan, thank you again. Really some
Thank
great.
you so much. Thanks for being such a great partner, Tim. The AE makes all the difference in the world, and you guys have been incredible. We could not be thankful enough.
Awesome. Thanks, everybody. Till next time.
Till next time.
See ya.
See ya.
Thank you.